Welcome back to another video. Welcome back to the Royalty FX Academy. Today we're going to cover zones, okay? To be more specific, how to draw the zones, top to bottom, where to start, how to identify them, what time frame to use, exactly straight from this book, Success Insight, Volume 1 and Volume 2, now available on Amazon. Show me some love. Go ahead and pick them up. Okay, this is a hands-on 60-day workbook challenge. Everything that you need to know and understand about the Forex market itself. All right, so without anything else being said, let's just go ahead and get into it. All right. So since we're covering these, let's go ahead and move on to the next one. All right, just like before. So I am going to be repeating the same thing over and over, but in different variations, in different ways, because the market is not always going to look the same. So all goal is to learn to understand the market so we could just be one with it. Okay. It's not our job to just know. We need to understand what we know. We need to understand what we see. Because when we understand, we simply just read and react. Okay. A person that knows how to trade always second guess themselves because they assume it because they just know. A person that understands how to trade, it's just simply read and react because, hey, that's just what it is. Oh, hey, that's just what it is. That's it. Okay. So again, we have another double top, right? Full candle, right? Where just like before, wick high. So again, you want to transition your chart to the line chart, right? So you're going to click from candles to line where it will look something like this, okay? Okay, something like this. And then your first zone will be your line, which is your turnaround point, the exact turnaround point. And your second zone will be your wick. All right, let's make it a different color so it can stand out a little bit more. Will be your wick. All right. And then if you use the rectangle property, you will start at the close of the last bullish candle, which is here, right? And then you will run it straight across. Okay. Getting the full wick, right? And when and if, like so, when market goes to your zone, you will simply wait for your PA, a bearish engulfing based on this zone. So we, for the most part, look like we covering top zone. And then we just take all sell to fall back down. Okay. There is no if, there is no but, right? Straight to the point. From the left to the right, use the line chart to identify the turnaround point, and then use the candle to identify the wick's high. Sometimes the wick's high can be the bearish candle, just like here. So here's a moving forward type of concept, right? Moving forward, after this plays out, when we do the zone again, right? Just like before, we'll use the turnaround point, right? When we using the rectangle property, we get the close of the last bullish going straight across like so, and then we will match it with the wick, creating that full rectangle process, right? So see that? It will look like so. See how that zone will look like? So for when and if the market goes back to that zone, and we'll just simply read and react and take all sell. Okay. That's it. Straight to the point. Okay. Always use the line chart to see the turnaround point. So you could mark your first zone, and then you go drop down to the candle to place the last, to identify the liquidity, the wick itself. So you could just wait for your setup. Again, understand market can go through the zone and be within it itself. All right. Of course, I'm gonna run that back. Always use your highest time frame when you are drawing your zone, and your highest time frame is going to be from monthly. That's the highest. The second highest will be the weekly and to the daily. All right. Those are the time frame you are looking for your setups. You're looking for the identity, the trading identity, either double bottoms or double tops, break and retest, so on and so fourth. Okay. Um, right. So now we have a bit different one, right? So I kept that like that because again, these are the type of setups that you get because sometimes the market will just sit there for X amount of hours, right? Because in our 4 hour, we could get 12 hours, 2 4 hour, 3 4 hour candles, 24 hours, right? A whole day, just straight consolidation before it falls. But the concept remained the same, right? We drop down, not, I'm sorry, we use the line chart to identify the exact turnaround point, okay? So we could mark our first zone. And then after that, we identify the wick, which is the highest, right? The market has shoot up to come back down. That's liquidity, right? So when we mark that also and combine together a full zone, start at the close of the last bullish candle, going all the way across like so. Now you see how the market is within the zone. So it's not always gonna go right through it. Sometimes that's how it may look like. That's why I kept these different variations of double top. So you can say today we are covering top zone, okay? Just top ones. So next time we could cover bottom zone, all right? That way you're not too overwhelmed with the learning, okay? So very simple, straight to the point. Just use the line chart, okay, to identify the exact turnaround point, and then transition back to the candles, identify the wick, and then box it in all together by using a square or rectangle property straight across. Okay. Now, me, like I said, I just like to use two lines, just keep it between, like keep it very, very simple. Um, and also just a little bit of advice. Everybody's different. When you're using the rectangle property, just use a color that's very faded. That way you could see it clearly, but not too bold. Because when you drop down to the lesser time frame, where a one daily candle will be, you could have 3 to 4 5 4 hour candles. Okay, it may look a little bit more chaotic, but if it's clean, you could see that okay, market is just chilling within the zone. It's not too overwhelming with the colors. Okay, so here's another example. Now this is more of structure, understanding zone for structure. I kept this to help you understand when within the uptrend, uptrend bullish market, where the market is giving you higher highs, where each high is higher than the previous high. Sometimes market will consolidate where it sits at an area like so. So you're going to use the points the same way where you mark the double tops zones. You use the point it turns around at, and then you identify the wick to make sure you get the full zone itself. But remember, when it comes to break, as far as break and retest, you know what? I'll save that for the next video. When it comes to break and retest, what has to be broken for it to be considered as a break? That's why we use the line chart. Because again, remember, if it shows you the exact turnaround point, think about what has to be broken, right? What does the market has to do what does it have to do exactly? Where does the candle have to close for it to be considered as the first part of a break? Okay, either for a downtrend or uptrend. But continue with this. Higher highs. After every higher high comes a high low. So just like before, when you are buying a uptrend market, right, aka also known as a bullish market, okay, so a bullish market or a bull market is a market that's going up, and it gives you higher highs and higher low, where each high is getting higher than the previous high. Of course, each low is higher than the previous low, but it is below, right? So hear that? This, even though it hit multiple times, it is one high low. Just like up top, it is one higher high. You don't have to keep on marking it, right? You just put it straight across. When you identify the full scope of the zone, the high and the low of it, once you mark it, you understand, okay, cool. It's just bouncing within the zone. All right. It's just bouncing within it. So you will mark it like so. And then for when the market does break, to give you a new high that's higher than the previous high down here. See that? And then once it comes back to give you that that high low, then we'll look for a bullish PA, right? A bullish price action to go up. Okay, so these are your zones. This is exactly how you mark them, right? So me personally, when I'm studying, when I'm back testing, right, I'm marking my zones to identify the exact turnaround point. I make sure I only use the line chart, right? I understand the wick, I understand where it's at, I see it, but I want to make sure I see the exact turnaround point and how the market itself reacted to that exact turnaround point. Okay. So when I mark my zone for uptrend market, right? So I'll do something like this. Okay. I'll just use the horizontal line, right? Well, let's just go with this. Yeah. Right. I'll go just like this, but I won't go all the way across. I'll just identify it. I'll just mark it, right? I'll just mark it like so, right? See that? Keep the line keep the chart very plain, empty, as simple as possible, okay? I'm just marking the turnaround points like so. That's it. See that? Boom. Boom. See that? Just like that. Boom. Now you see how this look? Again, I'll use the turnaround point, boom, and then plus the wick all together. It will look like something like this. You see that? So on and so forth, right? The exact turnaround point matching the wick, this wick right here. Okay. You see how it looks? Boom. That's how it would look like with the line. And that's how it would look like when you use both the wick and the exact turnaround point. Okay. It helps. It helps a lot. You need to understand that. Because, a lot of time market come into the zone, right? It's still within the zone. People say, hey, it broke it. But it's still within the zone. It's literally still within the zone. The whole area is the zone. When you understand that, you're not, oh my God, it's going to buy, it's going to sell. No, it's still within the zone. Just be very patient. Simply read and react. Okay. So we also have it within a downtrend, meaning market was bullish. It broke a previous. So remember trend reversal, right? For it to become a bearish. So from a bullish market to a bearish market, right? We're going to rephrase that. We're going to say that one more time. If the market is a buying market and for it to become a selling market, a previous structure point has to be broken. To be very specific, since it's buying, a previous high-low has to be broken. After the high-low is broken, market will give you a lower low, and then you will wait for a low high because at that point, it's no longer giving you higher highs. Once they give you that low high, that means market give you a PA. If if market does not give you a price action to sell, a bearish PA, there's no low high. So remember, another pointer. Okay. I don't know if I already mentioned that. I don't know if I mentioned it already today, right? Every turnaround point is a price action. Every turnaround point is a price action. So if you want to know where to place your zone, look for the turnaround point. If you're looking for the turnaround point, if you look at the candles, look for the price action, the engulfing price action. That's why it's a turnaround point. Market gives you a bullish or a bearish price action, so it to go down or to go up. Like literally plain and simple. Okay. So every turnaround point is a price action point, meaning you had a bullish or a bearish price action, the engulfing PA, right? That caused the market to go up. Now we transition. This right here would be our previous high low, right? And here you can see that. That's why I put it like this. Market broke. Here it gives me a lower low when it went up to give me that low high, because up top here is a higher high. So now we have a lower high. So we're waiting for market to give us another lower low and so on and so forth. Now with this right here, when market went to give me a new lower low, just like when it did previously when it was buying up, you notice that the market sat, right? It went up and then it went down, it went up and it went down, it went up and it went down. So in a higher time frame, market gives you a selling price action here, a selling price action here, and a final selling price action here that's completely fell. Vice versa, it gives you a buying price action here, a buying price action here, and a buying price action here. So just like before, you will mark the turnaround point and then the wick to channel this. So let's clear up a little bit. We're looking a bit messy at the moment. Okay, so we're gonna come back to here. All right, so right there, your zone for this, you're gonna box it. And how you box it, you literally mark the high and you mark the low. See that? It's still a lower low here. It's just all these lows are equal. Okay, and it's below the previous lower low. Literally, that's just it. That was the retest point of this. It just sat at this low high point here. Okay, and then this right here is a low high. Just all of these are the same. And then for it to break previous lower low to give us a new low. Now the next one that it did, it channeled. So just like before, this channel was more of a rectangle, right? It's just straight, right? It was looking like this, right? And then it's easy to box it in like so. You see that? It's just sitting there. It's not going anywhere, right? But this time around, it gave us a channel. What I mean by a channel, it didn't just sit and box. It was stepping up, right? It does something like this, right? So the market fell. It goes something like so. You see that? So it's like it's buying up, but it stayed within a channel at a wedge. Okay. I like to call that a slice of pie. It's just a wedge. So understanding it will also help you out. When you're marking these zones, you want to identify the low, right? You put the low like a trend line, right? You run it straight across. You put a trend line just like that, right? And you identify the high. So again, we're using the turnaround point to make our life very easy, right? Very simple. Excuse me. And we identify the high and we go just like so. Now you see how it's within the channel. Now, of course, when you identify the wick, it will look kind of like something like this. Yeah? It will be like a square. Oh, my bad. I'm sorry. It will look like a rectangle property, just like that, right? It will be within it. Okay. Literally, it's very simple. So when you use the line chart, it simplify everything for you. It makes your life so much easier. Okay. So as the market was going up to give you a new low high, let's change the color to give you a new low high, so you could take a sell. Okay. So let's throw a little note on that also. Okay. So just like before, when you are buying the market, you look for a retracement. To be more specific, after the market give you a higher high, you wait till it gives you a new high low, price action to buy to go up. So like, again, let me interact with the board. That way it makes more sense to you. Okay. When the market goes up, give me this higher high because it broke previous high, right? It broke previous high. Okay. Once it comes back to give me that high low, I'll wait for my bullish PA to buy it up. Now, for a selling market, right? When the market gives me a lower low, see, this is the previous low, right? Market broke that previous low to give me a low that's lower than that. I'm not buying it. It's a downtrend. We're not buying it. I'm waiting for the retest. I'm waiting for the pullback. Some people will say they are waiting for the correction. Okay. So when the market goes up, right? In the case of this, it went up multiple times. So that will be the first one right here, right? And again, when you take your sell, you put your stop loss at the last high. So even when it range, right, you good until it falls. So you will look to take your sell at the lower high. So in a downtrend, breaking retest point, you look to take your sell in a low high. Okay, lower high. That's the pullback to go up after a lower low. Okay, we sell the market on a downtrend at the low high. We buy the market doing an uptrend at the higher low. Okay, so we buy the higher low to give us a higher high. We sell it at the lower high so it can give us a lower low. Okay. Everything just falls in line. So just simply understanding will make your life so much easier. Okay. I'm sure a lot of you guys, girls, that is dogs and cats, that's seeing this video, right? Or seeing this short, you know the market, you know Forex, you know trading. The problem is you don't understand what you know. Because you don't understand what you know, you question it a lot. Even though you study it, you see it, you're like, okay, I see it. You take the notes on it, right? But you so focus on knowing so much, you have not given yourself a chance to understand what you know. Um, that's why a lot of you boys and girls, guys, girls, gentlemen, ladies, are always transitioning to new mentors or other individuals that say they teach Forex. You're always looking for somebody else because you never truly give yourself an opportunity to truly understand it to the point where I'm just simply reading and reacting. I'm going to lose with it and I'm going to win with it. That's it. There's no if and there's no but. Okay. Focus, focus on understanding, focus on understanding what you already know. That way you could just simply read and react to what you understand. And that's something you have already known. No more new mentors after you find me. No more new teachers. All right. Just stick with me. I got you. But no, for real though. Keep it plain and simple. Please give give yourself a chance to truly be successful. One of the main reasons why you are lacking is because you have not given yourself a chance to truly understand what you have already known. You're just looking for more and more and more and more information. And you're going to find a lot of people on YouTube that use a lot of word salad. They're just saying a whole bunch of things. They're not helping you understand what you already know. Auto block and balance, all this extra stuff. It's like, yo, it's just a zone. Higher time frame structure, it's just a zone. Once I get a bearish engulfing, which should be available either at 1, 5, or 9. Okay, every 4 hour up on 4 hour. Okay, tick the bearish engulfing. Why? The bearish engulfing means sellers have engulfed buyers. They have engulfed. They have taken over. I'm just taking it for what it is. Just like I mentioned before, I don't care what nobody else says. I guarantee you, regardless of the pair that you trade, before the market either sell or buy, it has to give you a engulfing price action. There is no if or but. Go ahead, take a look at it. Just challenge yourself. Here's a challenge, okay? Call it the Royalty FX Academy challenge. Go to the daily time frame, identify a double top, mark your zone, use the line chart, mark the first one, boom. Put it back on the candles, identify the wick. You could use the rectangle property if you could, just boom. Remember, the close of the last bullish is where you start for the top zone. Once you mark that zone, right, you see where it hit at, just put a halo there. Drop down to the 4 hour time frame. I guarantee you, before that market fell, sold, it had to give you a bearish engulfing. Either one of the fives. One of the 5 variation. It's in my books. Okay. I guarantee you. Speaking of which, right? One of the 5, right? It could be one of these. where it took 2 bearish candle to engulf the last bullish, or the most common price action. If this is my bullish candle, right? Oh, let's put more than one. That way we understand. This is my bullish. It's a bullish trend, right? And we get a 1 engulfing price action. See that? Boom. You're gonna get either this one or that one. But this is just 2 out of 5 variation, which is in the book. The ultimate price action. Amazon, Royalty FX Academy. Guarantee you will excel. But yeah, just do that. And you're going to realize that the market has to give you one of those every single time, because that's what it does every time. It literally has to. And then just, don't over leverage. please don't over leverage and place the stop loss where it needs to be, and you should be just fine. Okay. So yeah, turnaround point is the close of the last bullish candle. If you use the line chart, it'll help you out, and you just run it straight through, right? So this is an example where you don't have a lot of wick. I just always use a line anyway, so that's how it would be. If the wick is small, what to do? Just put another line on top of it. But see that exactly at that. Okay, so moving forward, okay, every turnaround point is going to be a price action, meaning the market give you a price action for it to fall. That's why it's a turnaround point. The market give you a price action for it to buy. That's why it's a turnaround point, because it literally turned around. And I guarantee you it's going to be an engulfing price action. Guaranteed. All right. Boom. Price action before it falls. Okay. Same zone. Sometimes it's the same zone. Okay. It just didn't hit it exactly, but it's the same zone. Okay. Don't overcomplicate it. See that? So it's the same zone. So when you mark your zone, just use the regular, the trend line. You know how you put your trend line? Just use that and just put a regular line across. That way your chart won't look so crazy, even though you can use the horizontal line to put it straight across. But this gives you so much more control. It's a lot easier to just do something like that. On the monthly, yeah, I use the horizontal. Just tap it, boom, easy to go. Once I drop down to a lesser time frame, the 4 hour, keep it very clean and simple. All right. So, let me not do too much. We're gonna stop it here. We're gonna run it back one more time. So when it comes to marking your zone, always use the higher time frame, your monthly, okay, weekly, and daily. Okay, that's for your technical analysis. Use line chart. Okay, please use the line chart to show you the exact turnaround point. Okay, drop down to your 4 hour, which is your H4. Okay, 4 hour time frame, and you are waiting for your PA, which is either bullish or bearish engulfing, right? And of course, the last one is going to be your SL. Always use your last high or last low. Okay. So again, for those of you guys that comments and like and share, I truly, truly, truly appreciate it. So I am new to this. I promise to keep on working hard at this to get better. Not speak too fast all the time, and not overwhelm you guys with the information. So I'm trying to keep the information into like 30-minute. Okay, breaking into that 2 halves. That way you really have time to absorb that. Okay. The books are in Amazon. All right. If you just want to learn how to draw your zone, okay, Success in Sight, either the bullish market one or the bearish market, it will teach you how to draw your zone, trend lines, Fibonacci. Like, it's a hands-on book. Okay. It gives you the step by step. You see that? The step by step on how to, you just trace over the line. You just trace over it. And then after that, you go ahead and practice it on your own. It is about 560 pages. This is a 60-day workbook challenge. I guarantee you, by the time you finish with this, you'll feel like a pro trader. When you go to the market, the zones, easy, okay? Also, price actions. If you already are a experienced trader per se, right, and you have a hard time executing because you don't know when to buy, or you hesitating, use the confirmation that the market always give you. The engulfing price action. All right. So again, type in Royalty FX Academy on Amazon. Ultimate price action will be available to you. Or if you just type in the ultimate price action, all right, you'll find it there. Again, thank you for the likes, the support, and the share. And that's pretty much it, man. I'm gonna see you guys next time. Of course, we got to get my crown. All right. That's what you get. When you go through the Royalty FX Academy school, when you graduate, you pass your challenge, you get one of these. Okay. You get one of these. You're an official member of the Royalty family. All right. Thank you again. We'll see you guys next time. Please like, comment, and subscribe. And I am out.